back to episode 5 of the Financial Decapitation Podcast. I am Sarkis, and today I'm, of course, joined by my two co-hosts, Peter and Mike.
What's going on?
Hello. Picking up from the last episode, we talked about potentially doing a taste test between the Del Taco Beyond Meat Taco and their regular meat taco. And starting out, first thing today that we're doing is going to be the taste test. We did not have any, our quote-unquote wine for the day was coffee, and our quote-unquote cheese today will be Del Taco.
Yeah, we have to have the refined palates to taste the meat.
Yes.
But not just any Del Taco.
Beyond Meat
Beyond
stuff.
Meat,
Del
yeah.
Taco.
This is going to be interesting, man.
Yeah, so,
So I'm blindfolded. I'm literally blind right now. I'm blindfolded. I can't see anything.
So both Mike and Peter are blindfolded. I'm the only one that knows which taco's which. They will taste test both tacos, and we'll try to figure out which one's the Beyond Meat and which one's the actual meat taco.
Now, they're both soft shell, right?
Yes,
so
they're
we won't
both
have
soft
any
shell.
varying flavors?
Yeah, they're both soft shell. Alright.
Same toppings, same everything, right?
There may be a difference in toppings.
Oh, interesting.
But so that'll maybe be an impediment, but it's just gonna be based on trying to just taste the meat and try and see if you could tell which one's which.
You know, I don't know about you, Peter, but for me personally, I don't eat a lot of... Actually, the last time I had Del Taco, I didn't even get a taco. I got the burger.
Oh.
So...
What? Wow. Del Taco?
Yeah, Del Taco has the burgers. They're actually not bad.
Alright.
They're actually not bad. But that was like... that was several months ago. And I've never had a Del Taco taco.
Interesting.
So
I'll eat them here and there. They're not bad.
I've had a burrito from Del Taco like I want to say a month ago.
They're cheap.
Yeah.
I heard they're not bad, though, against, like, Taco Bell. They're better.
It's stoner food.
Oh,
yeah.
okay. Oh, I'm with
So
you.
it's Taco Bell.
Yeah.
Essentially.
No, Del Taco's more stoner food than Taco Bell.
Hey,
really?
But I'll tell you what, though. That what Del Taco doesn't have is the Baja Blast Freeze, okay?
Oh.
That's the shit.
You know what they don't have is a Crunchwrap Supreme, which is
That
like
is
the
also
greatest
pretty
thing ever.
Yeah.
Really, more stoner food than
Oh yeah,
Taco Bell.
because they're open 24/7 and it's really cheap. So you come in at like 3 a.m. and you just get like a bucket of tacos.
Well, see, that's the thing is
yeah, you're right.
When I consider like stoner food, I'm thinking like all the weird combinations, like tacos made with chicken as the shell instead of regular like a tortilla.
I feel like carnival food would be like the best stoner.
It kind of is, but like when you're just high as balls and you really just want a freaking taco, Del Taco's open. It's 4 a.m. Let's go get it.
That's fair.
You know what? I went to Fat Sal's once, and I remember we did an extensive amount of drinking, and I just ended up throwing up in the parking lot. And like a second after, I was like, "All right, let's go get some French fries."
Oh my god!
Like totally all right. Like we're good. Let's go.
Wow.
Hey, I mean that's the life of a businessman, right?
All right, man. So let's start with the taco taste test.
All right, let's do this.
All right.
Should I like put out my hand and you'll like, you'll place it into my hand or what?
Yes. Right here.
Okay.
That is your taco.
Okay.
Actually, I forgot where I am. Where the table is. Okay, never mind. I got it.
Right here. So you feel the taco?
Yeah.
Yes.
All right.
It's not like wet or anything. Like it's gonna drip out of the back if I bite it, or.
No, I'll hold the plate underneath you guys.
I think it's fine.
We'll
I have my hands like cupped.
Okay.
All right.
Alright.
So we're gonna eat it.
Yeah. Take a bite. Chewing.
Okay. Tastes like a Del Taco taco.
Yeah. Tastes like a taco to me. Yeah, tastes good.
Not bad. All right.
Yeah, I like it.
Should I finish this or should I like save a bite and then do the other one?
Oh, I finished mine.
Oh.
I was like, oh, this is pretty good.
You're hungry.
Mm-hmm. Oh, this bite actually had more of the meat.
Well, so that is option number 1. That's taco number 1.
Okay.
Okay.
And now, Taco number 2?
Yes, taco number 2. Man, this is like giving me like flashbacks of like Rhett and Link just watching their videos and their taste tests.
You know what? I'll tell you what. Those guys, like I watched them when they were first coming out with the the magic. What do they call it? Magic, not Mondays. It was like Tuesday or something.
Oh, mythical.
Mythical Mondays.
Mythical Mondays.
There we go. Yeah, and dude, their videos are absolutely fantastic.
This one's heavier.
That's what she said.
It's heavier. Okay. Oh.
I'll give you both plates for this one.
Okay.
This one's wet. I like grab the back end. Damn, that's what she said. Big time. Sarkis, wait. I don't know like which is the top or the bottom. I don't want to grab it upside down. Yeah, can you like help me?
There we go.
This is the Beyond Meat.
Okay, there we go. Hold on.
100% this is the Beyond Meat taco.
Hold on. Oh. Okay.
It's different. But
okay.
Very meaty. Actually, palatable.
Yeah, I'm also going to say this one's the Beyond Meat. Yeah, I'm going to...
What makes you think that is the Beyond Meat?
I mean, coming from someone who does not eat, or has not eaten a Del Taco, I mean... I don't know, the texture, kind of like that aftertaste, it's not bad, but it's certainly different than what I've experienced with most, taco fast food, like Taco Bell.
So tell you what I'm getting. I just coughed a little bit because, and I'll tell you this is exactly why. I can tell it's not meat because the meat is coming from like spices and peppers and stuff. It's a little bit peppery, or not peppery, but like the flavor was made to be this way, and I can tell that. Like going down my throat, I feel like I need to drink some water or something after it. And it's a little more.
It's kind of salty. A little
bit.
Yeah.
It's a little more wet.
No, it's not a little more wet. Yeah. It's very wet. Let me
just move the mic.
Like from the
I stuck my hand into the back end, I think, and it was just goop. I was like, uh-oh.
Can you pour me some water, please?
Yes.
Yeah, I need something to wash that down with. It's a little bit salty. It's a little more, like, I think it's the spices that are getting me right now. It's it definitely tastes like it was made to be this way as opposed to the first one.
You know what? I will say though, like, that was pretty good, huh?
Water mic?
I got my drink. Yeah.
But yeah,
that was pretty good, dude. I feel pretty satisfied. Like the first one is kind of like your basic taco, really simple, really run of the mill. This one though, I thought was a lot more flavorful. Personally, it appealed to me a little bit more, just a little bit, not a lot, but it did make me want to have this one a little more. Now, of course, at the end of the day, it comes down to pricing level because, I don't want to spend like $20 on Del Taco, but.
So, final decisions. Which one was the Beyond Meat taco, you think?
Second one, 100% was the Beyond Meat
Yeah,
taco.
I'm going to say second one was Beyond Meat.
Okay. And the answer is...
Yeah, let's hear it.
Taco 2 was Beyond Meat.
Okay, all right.
You chose well.
Nice.
So you guys can take off your blindfolds. Yeah.
All right. Oh, we couldn't see it, huh?
Yeah.
No, darn. Because I wanted to actually, inspect the meat. Do you have a piece of meat?
There was a lot that fell out of my taco.
Yeah.
So, for context, in terms of pricing, the Beyond Meat taco was about $2.50, while the regular tacos were around 80 cents.
Man.
But the thing is the Beyond Meat taco came really fully loaded with cheese and tomatoes.
Yes.
And it seemed to just be a bigger taco.
I mean,
itself.
In terms of weight and what was in that taco, I won't lie, felt like I got the supreme version of a taco. And so, I mean, for a pricing level like that, if I'm getting actual lettuce and tomato and cheese, I'm getting the whole thing, then I think personally I'm cool with it, because the first one felt really simple. Just your shredded lettuce and meat and cheese, very, very small, simple.
Yeah, the second one was, the first thing I said was it's heavier.
Mm-hmm.
Yeah. There's just more in there.
Yeah.
Not bad, though.
Difference.
That's not bad at all.
Yeah.
It was good.
I'm curious to see what it looked like. Does it look like meat?
It looks pretty it looks like that ground meat that you get from taco places.
Interesting.
like Taco Bell and
Yeah, very meaty texture, but like there was like more like juices. It literally, I don't know if you got the same taste as me. Like it was just chock full of like spices to get that flavor.
It was. Yeah, it was very flavorful. Like, and that's the thing that kind of blew me away. Is you would expect that more with like a regular meat, but I felt like this one had just that much more flavor than what the first one initially offered.
So, in terms of taste, you guys actually preferred the Beyond Meat?
That one was good. I liked it.
I think I just like that taco better because there was a lot more in there. Yeah. The regular like Del Taco beef taco is kind of lackluster a little bit. Yeah. It like Simple. I said, it's literally stoner food, but meat was decent. Like the regular Del Taco meat isn't really spiced or like flavored or peppered or anything like that. They don't really add a whole lot onto it. At least I don't think so. That wasn't bad. I don't know if I would continuously go back to Del Taco and order it over the regular food, or how much I would do that, especially considering its price hike is like 3 or 4 times as expensive.
Yeah.
But really not bad.
Yeah. I mean, personally, I agree with Peter. You know, I don't know if it's something I would constantly go back for, but I think it's going to be one of those menu items where I might sit down and be like, you know what, today I'll get it.
Yeah.
You know, I'm not really opposed to it. It will just depend on my mood. So I think it's just one of those things on the menu where, you know, if I'm really feeling like it, I'll buy it. So I have nothing against it. I would actually recommend people to just give it one go.
Yeah.
It was pretty good.
Like, or like, what is the nutrition facts on it? Is it like salty as fuck? Or?
I didn't actually check the nutrition facts on those. From what I understand, Beyond Meat, it's lower on some of the, I believe it's like saturated fats and stuff, but in terms of like caloric levels, it's not like super different from meat. It's still pretty like heavy. It's not like you can just go eat it like all the time. Just like don't expect it to be like ultra healthy.
Well, so since we're on the topic of Beyond, they've lost like a lot of their value, and they're still significantly above their IPO. But they've lost.
We also have more tacos and other food.
Perfect.
Yeah. Just a side note for everyone listening. This is also kind of like our lunch. It's like 12:30 p.m. right now. Probably the earliest we've recorded in a while since our last couple ones have been evening and nighttime.
Yeah. So I mean, the market is still open as we speak, but Beyond Meat is down like 40% since their peak or something ridiculous like that.
Yeah. Oh, by the way, I just quick note, I hate to diverge on that, but to pull up the information on the Beyond Taco from Del Taco, the nutrition is actually pretty poor. Now, of course, I'm going to obviously look up how the regular tacos compare, but in terms of like the percentage of daily value, you know, you're looking at 29% of your total fat with 50% being saturated.
There's sugar in
there.
Damn.
There's 1 gram of sugar, which is surprisingly low, because in most fast food there is a ton of sugar. Because
in tacos, where?
In fast food in general. Maybe not tacos per se, but I mean if we're discussing fast food in general, for example, In-N-Out buns have a phenomenal amount of sugar in it. A bun?
Oh, they're like sweet buns, aren't they? And they're like Hawaiian buns or something.
They might as well be Hawaiian buns, given how much sugar they have. Yeah. But if we're looking at like the vitamin count, I mean, it gives you 20% iron, which is actually pretty good because I think iron deficiency is a very common thing in most people's nutritional diets. Only because you're consuming so much. Well, actually, I mean, I'm not sure, but it depends on what your dietary consumption is. But I know some people do lack in like iron. Iron deficiency is pretty common. Gives you like 6% vitamin C, sure, 10% vitamin A, 25% calcium. Which I thought was pretty interesting.
Calcium?
Calcium, yeah. That's a pretty interesting one. In terms of the salt...
Cheese, maybe?
Possibly. Calcium? Yeah, that's true. I mean, 25% though from the cheese, I mean...
That's a lot of cheese.
That's a lot of cheese.
And I think it's mostly American cheese, which I don't know if it has a lot of calcium.
Yeah, that cheese isn't that loaded.
And then the sodium, I think we were on the ball when it came to like the salt content, because it's 21% of the daily value with 510 milligrams. So... you know, that's definitely a lot of salt that we're going to be consuming. So, in reality, you probably shouldn't consume... I mean, this goes for most fast food places, but you probably shouldn't consume this on a daily basis as would any other typical fast food dish, but
is all Beyond Meat that salty, or is it just the Del Taco?
Beyond Meat does ground beef, right?
Yeah.
Okay.
Well, ground something.
Oh, right. Not ground beef, but ground meat.
Ground Beyond.
Ground Beyond.
That's salty. That's really salty.
It was quite salty, I gotta say. But sorry, I know we kind of sidetracked from what we were discussing in terms of Beyond Meat's financial statement, their growth level. So Peter, sorry, fill us in on that again. You were...
Well, what was the most recent partnership they just announced? Some other fast food company? Again, recent? I don't know. They have so many different...
Was it Burger King? Or was that... Hold on. That might have been impossible. Sorry.
I don't know. Did we talk about, or did I just send it in our group? There was the vegan ETF.
Yes.
Oh,
yeah.
yes.
You sent that the vegan ETF, which for anyone out there, I mean, I know we briefly discussed ETFs before, but they're kind of like mutual funds.
Subway.
Oh, that's right.
Yeah.
That's right.
Yeah.
By the way, that's going to be huge.
With a meatball marinara, yeah.
And the reason that's going to be pretty big, I'm not going to lie, I personally don't like the meatball, and I know a lot of people don't from Subway, but I will say this. The meatball sub is one of the 7 subs on the sub of the day menu.
Oh.
So bear in mind, right, now you have 2 options. Now, if Subway maintains the same pricing level regardless of which meatball type you choose, this could be incredibly profitable for both Subway and for Beyond Meat. More or less on Beyond Meat's side, but, Subway might get a little more marketing attention for free just because they created this partnership. But yeah, good score. Absolutely good score. Massive.
Well, so yeah, they got new partnerships, but they're still steadily falling in price.
Yeah.
And I mean, they're growing though, so I don't know what the price difference is from. Maybe they were just significantly overvalued.
Well, remember when we were discussing a couple episodes ago, when we're looking at a stock valuation, especially a new stock, we were discussing this with AMD. When AMD took a bit of a nosedive, right? It wasn't severe, but it was extremely noticeable in the market. Yeah. The reason for that is because the financials that came out were underperformed to investor expectations, which we discussed last week. Even if they beat an EPS, investors have their own personal expectations. So typically when your fundamental value, aka news and released products, tend to be very, very good, they're expecting a little more. And unfortunately, AMD did miss that mark a little bit on the investors' end and not the actual end. But pretty much what we're seeing with Beyond Meat is that same exact thing where they're now changing their financials. They're pushing a lot into R&D and partnership. A lot of that can go into like marketing expenditures. So in all reality, I'm pretty sure if we looked at their financial statements, we're going to see not fantastic expense marks, so probably very expensive. We're probably going to see a lot of physical assets start to expand as we move forward because you're trying to achieve low cost. The only way to do that is by mass manufacturing and centralized distribution. So that's probably explaining why they aren't doing fantastic with stock price, but stock price is just a price. You got to really look into the nitty gritty to see why it's decreasing. But I mean, that's my 2 cents. I don't know if any of you have like an alternative or maybe a separate perspective on that.
So I mentioned the vegan ETF, and I thought it was a really dumb idea. Basically, the vegan ETF is comprised of socially responsible exchange-traded funds, some of which appear pretty bland, but it's a pretty large portfolio. I think it was like 276 stocks with an average market value of over 220 billion. That's, if you're combining all the market value of all the companies or the index for it, it's pretty significant. And it pretty much encases environmental and social governance funds, and it's, it includes familiar names like Apple, or in our case, Beyond.
It sounds like the SRC 100, the social responsible companies and that type of stuff.
Similar.
That's what it sounded like to me.
Yeah.
Similar, but
because it's not just about like vegan food and stuff, it's also just like environmental or environmentally responsible companies.
Right.
But the fact that it's trying to like establish a name for itself as an index in like younger investors and traders just because it's a vegan thing and it's kind of trendy, I think is really, really dumb idea.
It's
I don't know, man.
It's interesting. I mean, it's really hard for me to say whether it's a bad idea or not because I think
the concept is there. It's socially responsible companies make sense.
Yeah.
Because people want to support people who support, the world, them.
Yeah, right.
But the idea of being an index simply because it's trendy or it's following a trendy theme is a short-term thing.
Well, also keep in mind an ETF is created for most types of industries because some people want to invest in the general industry or the sector of the market rather than a specific company within it. So I mean, vegan, I think would make sense only because even though it's a trend, a lot of companies are penetrating the market in that sector. And I'm pretty sure, like, weed, marijuana ETFs and mutual funds will become a thing, and if they already hadn't. But, that will become a thing only because you're going to have so many companies start penetrating the market. It's kind of like, for me, I don't know which one I want to go all in on, or I don't know which one I want to diversify with, so I might just want to do the general sector or the industry itself.
Well, so why would an ETF called vegan have a company like Apple? Is it just because it's a play on words and it's the name? Apple is considered a green company. They're environmentally friendly, even though they sell thousands and thousands, if not millions and millions and millions of batteries, which are hugely not environmentally friendly. But, they're part of this vegan ETF. That much I don't understand. They're considered environmentally responsible, though. I don't understand that either. That's kind of...
I don't really have... I don't even have a guess on that. I mean, the only thing I could possibly think of is maybe it's their way of trying to diversify or have a company that's green but not necessarily vegan in to help maintain the fund. But if that's the case, I would definitely question the title of it.
Yeah.
Yeah.
That's just...
Add in a few more kind of stable companies so the prices don't fluctuate, like, dramatically.
Right.
Reduce risk, because then you have, like, obviously young stocks like Beyond, which can fluctuate a lot more. Young stocks that could fluctuate a lot more. You want something that isn't typical or isn't usually going to move around in price too much.
Right.
Stuff like Apple and what were some of the other big companies that were...
I think Microsoft was something there too.
Yeah.
Oh, that's interesting.
Yeah, it's a really odd mix, so I don't understand the ETF as a whole, and it's kind of a weird case to crack.
Okay. Yeah, that is kind of odd. I mean, from a personal standpoint, I don't think I would invest in that ETF, or at least not right now, only because A, it's probably new, so you don't really have a whole lot of financials on it. You would probably have to do a correlation analysis to see, like, is the stocks that they're investing in proportional, and if it is proportionate, and if it is proportionate, then the correlation between those that are marginally proportionate with one another, because if they correlate strongly, that ETF could tank heavy in the event of a market meltdown, which, keep in mind, is becoming more and more probable moving forward.
You know what? Let me see if I can find a list of what it's comprised of, because it's a really bizarre ETF. It's kind of looking for a weird target audience. Yeah, I don't know. I'll pull this up at some point if I can find it. So I just actually found that Beyond Investing is the issuer for that fund, and they filed plans for this ETF almost a year ago, which was expected to debut in January. I guess that didn't happen, but I mean,
is it this January? Like the January
actually, it might be this January. So in like 5 months' time, 6 months' time. Huh.
Okay.
But Beyond Investing, that's Beyond. That's the company that we're talking about. They're the ones who filed this ETF. So are they at the head of the ETF here? Are they like the largest share?
Well, I mean, there's always a host company that sets up the fund. So I mean, you know, I mean, you got like Berkshire Hathaway and you know, those types of companies that set up different funds and whatnot. So I mean, that's just a host company.
So I see. It says the ETF will screen out companies that engage in animal exploitation or whose activities harm animals. This is a report from the Wall Street Journal.
This sounds like a PETA.
It'll also avoid companies engaged in environmentally damaging activities as well as those in defense and military industries or whose activities contribute to human rights abuses.
That's a lot of company, actually.
That's a lot of companies and a lot of money they're avoiding.
Well, because the thing is, although I like that stance, people need to understand that if you manufacture in a lot of different places of this world, there's going to be one breach on that entire list. I honestly doubt there is a handful of companies that can maintain all those standards. I mean, Apple doesn't. Apple manufactures in China. That's a huge violation. I mean, the violation of human rights is the freaking one-child policy. I mean, that's key right there. Violation of any type of like family planning and support.
Do they still work with Foxconn, or have they moved on to another manufacturer?
That's going to take some time. I don't know what's going on there, but whatever happens is a slow transition.
Yeah, that's because if they're still working with them, then that's still human rights abuses of like people being worked to death, or people literally commit suicide because they're being overworked.
Yeah,
and they set up nets outside of the manufacturing building.
Yeah. At least in the States, that's not something you're going to hear about or know about.
Well, I mean, we're seeing. I mean, looking at recent news, you know, I know we're not too much into politics on the podcast, but you know, the whole Epstein thing. You know, the more and more I'm reading about, the more and more you sit there like, boy, there's a lot of things we don't know. You know, and I mean, tying that. I mean, of course, is a long shot tie-in, but tying that over into finances, I would almost bank and guarantee that there's a lot of things we don't know about within the market. I mean, the Fed's rates affect the market pretty substantially, right? Yeah. Who's to say that there's no other types of interferences that are within the market that are subliminal to us, but are incredibly, incredibly weighty on the market? You know? Now, I'm not a conspiracy theorist, but I'm just offering that alternative thought, because at this point we're learning anything's really possible.
Definitely.
At this stage in time, anything is really possible.
Yeah.
I wonder how much of manufacturing is being affected by all, you know, the Hong Kong rebellion and...
I am actually really happy you brought that up, because I did want to discuss Hong Kong, because on a financial level, this is actually really big.
It's pretty important.
So for starters, a couple days ago, I'm sure you read in the news, Hong Kong occupied their airport.
Yeah.
And shut it down for 2 days.
Yep.
All right. On top of it, today, Hong Kong is occupying and pretty much derailing the banking and currency industries that are hosted within Hong Kong that convert, trade, and manage the Chinese currency. Yeah.
I just want to kind of give a little bit of context. I don't know if we mentioned it before, but today's August 16th. It's Friday.
Oh,
just
good
so
point.
Yeah,
that way people know the relativity on the dates. Yeah, it was a couple days ago from today, so maybe like the 14th. I think I read about it, and then it was yesterday. The police began dispersing. It got incredibly violent, very physical. I don't think anyone died, but a lot of people got extradited to China per the new law.
I thought they were tabling that law,
that law was, dude. When China says something, it's not tabled.
That's
China
why
says
there's a rebellion.
Yeah, it's not because there was a chance. It's because it literally happened. So that's why the Hong Kong people are pissed.
I thought they were trying to officiate it, like get it signed, but then that's when the
no, this is China. This is a communist government. They do whatever they want. It's not a democracy. They don't have to vote.
And even if they were tabling these things, like, it was going to pass through. I mean, when they say we're tabling it, it's just in the inbox waiting for the signature. It's not like it's going to be debated. But I'm glad you brought that up, because today, you know, a lot of the Hong Kong citizens are going to be derailing and delaying the services for their financial buildings that support and back Chinese currency. And as you all remember last week, it was last week and a half ago from today, China altered their currency again, purposely deflating it without issuing, which is a huge problem, because currency is supposed to deflate, inflate based off of how much is saturated in the market. when someone just says like, "Hey, this is what my currency is now worth," without doing that, that's a problem. You know, because where's the backing? The backing is U.S. dollars and foreign dollars.
What would a country benefit by hiding that information and saying, like, doing what China did? Why would they do such a thing? What are they seeking to gain out of this?
It's a use of economic warfare. So this is a concept most people aren't super knowledgeable in. Is only because it's a very unconventional type of war, but is incredibly effective because it can delay good transportation, supply chain management on a global level. So what China did is pretty much they deflated their currency, all right? As a result, the power of other people's currencies becomes stronger against theirs, right? Now, when tariffs are involved and they're blocking out certain exports, right, even if they're deflating it, even if we have more buying power, if our currency is backing their currency and now it's deflated, our currency is now worth less against their currency and what was backed.
So they're hurting themselves the most, but they're doing that to hurt people.
Everyone else, right. So they're hurting themselves the most, but they're hurting multiple people simultaneously with the long-term advantage. So short-term, they're going to get hurt now. Long-term, we're all going to feel the burn of prices later. And what it does is it disrupts shipping, it disrupts global transportation and supply chain management. It's a chain reaction of serious trade issues. Which is terrible, because, I mean, economic warfares are the absolute worst, because it's not the government that suffers, it's not, you know, the rich that people want to try to go against, it's the average person. People. Yeah. And, you know, it's unfortunate because this trade war we thought was coming to an end about 2.5 weeks ago and 3 weeks ago is now just heating up once more. You know, and we just can't have this. We cannot continue to forge these wars, especially against China. I mean, now is just not a good time for that.
Yeah.
Well, not a good time for who exactly? For China or for us?
For both, really, but more or less for us.
Because this has been a long time coming, and this is sort of like I know Trump brought a lot of attention to this, but all the previous presidents didn't seem to think this an issue, even though China was gaining a lot of footing and economic ground and kind of, you know, raising their prices and sort of turning into the power they are today. Over the last 30 years or so, they've gained a lot of ground. Like, they've become, you know, one of the largest consumer of oil, and they've, you know, built an entire road network that covers and expands far more than anyone else. They've started generating more cars than you can imagine, and they've become a huge player, becoming, you know, creating knockoff products or real products. You know, it doesn't matter what. But the amount of ground they've covered, what's to say that this wasn't like guaranteed going to happen sooner rather than later? It's kind of like you expect it to happen, but to what extent? And then even so, you don't know what outcome is going to come from this. I mean, what we have to do is we have to look at the prior administrations and what they were doing on an economics platform. Okay, because the problem is everyone right now is blaming Trump for this.
Yeah.
And I get it, a lot of people don't like him, but if you're going to dislike him for any reason, please make sure it's for the right reasons, because this whole economic war that we're with in China was going to happen now rather than later, and it's not because of his policies, it's because of the former presidents before him that built such a powerful platform on China. So for example, when manufacturing was being pushed into China, we were giving them control because that's the middle step of you know, the sale point.
Yeah.
Right? So when you give another country that power, they can leverage you now. They can be like, oh, all right, well, fuck off. I'm not going to give you your goods. You know, I'm just going to go ahead and put some excise tariffs on you. I'm going to embargo you, and then you just lost that middle chain of the sale point. Well,
so what's to say that maybe, what if they like delayed this whole war until, you know, our entire country is based around their manufacturing from A to Z, everything?
Well, this is why I think
why did they do it now? Why did this happen now? Was Trump just trying to end this before it got too far?
Well, remember, Trump's a businessman.
Yeah, of course.
He understands, regardless of how well his own fortune does, which bear in mind doesn't do fantastic. He does run a lot of deficits, right? So I'm not saying he's a phenomenal businessman, but basic business 101 is you want to vertically integrate. You want to make sure you can own the means of production so that you can be successful, right? Cheaper input means cheaper prices on the consumer end, which means you get more consumption in general, generates brand loyalty, and that cycle continues as you release new products.
Yeah.
Now, this is the problem. I think he knew that manufacturing was being oversaturated in China and many Eastern and Southern Asian countries, right? So remember when his main platform in 2016 was he wanted to bring manufacturing back to America. Now, of course, a lot of people were against this stance, saying we're a service-based nation, we don't need manufacturing, we're all educated. The problem is people don't understand you have to have a balanced economy, right? If you're 100% service-based and your population is 100% educated, you've created a norm and a standard that now introduces no ounce of competitive.
Which is what the U.S. is transitioning into over the last
Exactly, because everyone... See, and that's the thing. Everyone is pushing each other to get college education, which for me, I'm not 100% against, but people need to understand the consequence. And the consequence of that is that your baccalaureate degrees are worth nothing. Absolutely nothing. Zero competitive advantage.
It's the start point.
Exactly. So now what we did is we devalued high school. So now anyone with a high school diploma has that less of a chance now to become successful. And a lot of people want to blame them for not going to college or not going to a community college, but you have to understand, some people don't have that ambition, and the strive to become 100% upper educated is going to lead to, future sociological problems.
And then on top of that, and you've mentioned this before, with the rising cost of tuition and going to school, it sometimes just doesn't make the financial sense to go into so much debt for a bachelor's degree that maybe gets you an entry-level job that pays not that well.
Here's a proposal. Does it make sense to rise educational costs to the extreme that the general public starts to transition back into blue-collar work and manufacturing work? Make education so expensive that only the ones willing to strive for it for that value would do so.
Well, the problem is that's not how the system worked initially. Initially, right? But keep in mind, initially college was what was efficient because we didn't have FAFSA, we didn't have aid. It was all out of pocket, or scholarship, because there were some philanthropists and nonprofit organizations that help you through. But it was the introduction in '76 of the Financial Act for college.
That ruined it.
That is what really fucked the system up. Because now it's like, oh, I know I'm not ready for college, but I want that college experience. So today, remember, think about when we were in high school, right? Everyone was talking about the college experience, but no one was talking about the class structure, the money that it would cost. No one was talking about the value of a degree, which is why we have people who strive for degrees that have low salary paying occupational positions. And that's the problem. Those people are now fighting to get, this equal pay to another degree standard, which makes no sense. Like you know what? I know I'm a business major, right? I know I'm studying theory and I know I'm studying practical skills for the business sector. So for financial services. This is the thing. I'm not bitching that a doctor's going to make way more money. I am not bitching that an engineer will make phenomenally more money. But you know what? That was my decision. I'm okay with being middle class or upper middle class in the future, because that's what I want to do. Right? But I'm not going to go out in public and be like, fuck it, I want equal pay as engineer. No, you worked hard for engineering degree. I've seen the type of work you have to do in engineering, and it's a lot of work. So I'm not going to expect to get the same payout. I'll be honest, I've shown up to class like hungover countless times, but I know in the engineering, colleges, you can't do that because you literally have to take notes and concentrate and really focus in on the integral skills.
I've had so many people talk about how lax their classes are and how they would show up and not give a fuck. And if I showed up to class, if I showed up to any of my mathematics classes, physics classes, or anything like that, or engineering theory classes, high as fuck, I would miss I would just space out on all the notes I had to take for that day.
Yeah.
I would immediately fall behind because I'm already missing and misunderstanding certain concepts. I have to go out of my way to redo everything, find everything out of the textbook, or relearn the shit myself. And you fall behind so quickly because every day is some important new concept or a new theory or whatever it is. And yeah, you're totally right. And I've been there, and it makes sense. So the thing is, though, is government funding is allowing everyone to sort of establish the new baseline, the new standard, like you said.
Yeah.
If government pulls their funding, college is that much more expensive, university is that much more expensive, that many less people stop going because they can't afford it, and then all of a sudden this degree has more value because less people have it and it's more difficult to obtain.
Right.
Even though it's the same amount of classes and work and everything. It's the difficulty of achieving this degree, this concept, that gives it its value. Because everyone is educated, it lacks that value, which is why blue-collar work, specifically skilled blue-collar work, at least here in the States, has so much more value. Our buddy Jake, who just went to Florida, is an underwater welder, went to some trade school for 4 months. And all of a sudden,
on the East Coast,
and now he's in the East Coast doing some sort of underwater welding, and he's getting paid how much? I think it was like 70 or 80K a year.
It's 80K.
Yeah.
Starting salary for a blue-collar job. You don't have to use your brain at all for this. You go down, you
follow your instructions, you follow your training. Yeah.
Well, yeah, you follow your training. So, I mean, you still have to use your brain a little bit, like how to weld and what wire and where and be careful, this kind of thing.
Yeah.
It's... The job pays well because it's in itself an occupational hazard. It's dangerous.
Yeah.
But it's just blue-collar work, and it's making that much money compared to, say, the jobs that you were looking at in the market industry, starting as, like, an assistant making 40K a year or something.
And also keep in mind...
And keep in mind, you have a degree and he doesn't.
Yeah.
So...
Yeah. And I mean, let's also look at his prospects for jobs, right? When he graduated trade school, he got a job within a week.
Yeah.
Do you guys remember that? He came back and he's like, I already have an offer. And I'm in.
The school helped him find a job because they're so well connected to the industry because no one has jobs in the blue-collar industry.
Well, within a few weeks of him coming back, he already had an interview scheduled, and then next time I saw him, he had an offer.
Yeah.
Yeah.
And bear in mind, this is an economic balance, right? So, I mean, economics typically is, theory and laws that we've generated that aren't necessarily mandatory or the law of the world, but it gives us a good idea to what we can really think about on an economic standpoint.
Hey, how do you feel about investing in blue-collar companies?
Oh, that's always a good decision. Absolutely. Like, I mean, like construction companies, for example. Those typically are a pretty safe investment. I mean, construction in part, maybe construction wasn't the best idea because, I mean, construction is pretty volatile to the market level only because it's based off of developing properties. But most construction companies have, like, maintenance or electricians. They typically diversify safe enough where even if the market tanks, they can still maintain services they provide to their clientele. But, absolutely. I mean, blue-collar work is always a very safe thing to go into. And the reason for it is because, you're going to have to fill those jobs. And there's always going to be the services that require them.
The thing about construction, especially with, like, government work, is typically when the government has a job, they put that job up for an auction, basically.
Yeah.
And the companies start sending in their offers, They'll do this work with these materials and this cost over this time frame, and whichever is typically the best cost price to,
performance ratio.
Yeah, price to performance ratio is typically the chosen. They typically go for the lowest price with the most amount built into it. Yeah. And then so once the auction is done, after the closing date, they'll pick the company that'll grab that, and so it's a hugely competitive market. That's just with government jobs. With the private sector, it really depends on development. If you're in a big city that's constantly developing, or in another country that's constantly developing, or if you're already in a fully developed city, then it's just maintenance costs or rebuilding. And what services do they offer? Do they do licensing services, or do they also do like permits and everything for you, or do they just like build it and expect you to come in with all the licenses and work and everything already ready and set out for you? Every company is different, so it's kind of hard. That's why I ask, is like, which companies do we look at? Do we want to look at, his underwater welding company to see if any are publicly traded, or do you want to, what makes sense in this industry?
I mean, with blue-collar stuff, a majority does tend to be private, only because, for example, like electricians, those tend to be mom-and-pop stores, little shops, because... it's family run. You don't really need a big company of electricians because, you're going to be spreading thin across many different places. You're going to run high administration costs. Mm-hmm. It's just a lot easier that someone's like, all right, you know what? I'm in the city of Northridge, heart of the valley. Let me just open up a shop here. I got let's just say a 30-mile radius. I got 4 cars. I got 10 electricians, and then I'm doing all the financial work and of course the management. boom, you can start supplying and servicing the community. Same with plumbing companies. I mean, do you know a single plumbing company that is corporatized?
There are a couple of plumbing companies that are pretty big that spread out throughout the entire city, like all of LA.
Right.
But I don't know of any plumbing companies that span throughout the nation or multiple states, at least that I can think of.
And most also don't even do their own state. Most of them can only do, at most, a portion of a city. Yeah.
Yeah, so they'll have service areas, and they'll work only within that service area.
Exactly.
But they're still fairly large companies. They still, like, for instance, I just called, I think it was called Dutton Plumbing. They came up to one of our houses that we own, and they checked out the storm drains there. And they offer, it was like $73 or something per drain. And the guy came in, a corporate van with a giant Dutton logo across the side. And I got an email from their dispatch saying, this is the guy who's coming. It showed me a picture of his face and everything. Said they tried to give me like some personal story in the email. He's been in the industry for 30 years and has a family and kids. You know? It's kind of they try to make it personable. But it seems very corporate because I spoke with dispatch. I got text message from some service company, and then some random guy showed up in a corporate van and pulled up in like official uniform and everything. So
I mean, those companies can still have uniform and corporatization, but I mean, more or less when I'm thinking about corporate, I'm thinking about like a conglomeration that's nationally
national scale.
Yeah, but I mean, I think this is the true glory of trade schools and blue collar right now. And now, of course, it depends on your mindset and what you want to go into. For me, I knew growing up, I'm not really physically labored based. I definitely don't like doing any type of physical labor, and that's just me, you know. And some may view that as not a good thing. Personally, I think it's just who I am. Some people are just happy to do gardening, or some people are just more than happy to be a construction worker, and that's totally fine. It's just not my cup of tea. I prefer being in an office. Right, so I picked the corporate life. I picked, you know what? I want to go into an office building, do my 9 to 5 a week, enjoy it. But you know, that's the glory of blue collar, is because when you do go into that, the options of you becoming entrepreneurial are that much higher.
So, how about this then? If you're looking to invest in private equity, would you say blue collar work is a go?
Yeah, absolutely. I mean,
especially considering the fact that it's something that might never corporatize or go on a national scale.
Yeah.
It's something that stays locally within your city. How much can it possibly expand or grow?
Well, I mean, for me, I work in private equity and hospitality. We do a lot of real estate stuff, right?
Sure.
When we buy a hotel, right, we're not thinking about a national business. Even if it may be a Hilton, they're nationally established. But it's not like the hotel we bought is a national hotel. It's a hotel to the region. It's a single location. So, I mean, if we're thinking about private equity, concentration is not a bad thing. You know, if we ever invest in a small plumbing company that needs a capitalization for startup, let's just say, and they have established experience, this dude or woman was a plumber for 30 years and now they want to open up shop. Hell yeah. I mean, there's honestly nothing wrong with going blue collar because it's just as risky as going into any other type of blue collar in that sector. It's equally risky because no matter the saturation, it's a service that's necessary and is a cornerstone to society. I mean, we need plumbers. We need electricians. We need all that stuff. I mean, waste management, right? Everyone listening to the podcast, if you listen from episode 1 to now, you all know I love waste management. Why? It's blue collar. And it's a cornerstone to society. We need landfill collection. We need trash, sewer. This is just one company, and this is probably one of the best examples of a blue collar based company that does everything. Everything.
Yeah.
That's why I love them, because it's stable.
Backed by the Italian mafia.
Yeah, that is the big joke. Yeah.
Well,
whether it be true,
it
might be.
It's definitely true. That's not a question. It's funny enough. I talked to multiple people about that same stock, about that same company. I came up to my dad. My dad, I mean, he's pretty into news. He listens to a lot of news. He's pretty well into the market, and he trades on his own. And he used to be part of corporate America as an engineer, so he kind of knows the stuff. And I told him, there's this really good company that you could invest into because it's stable, it's consistently growing, and it's not based on market trends. So I told him, like, waste management. Do you know anything about it? He's like, yeah, it's run by the Italian mob. And I'm like, yeah, that's the first thing he says about that company. Yeah. I spoke to someone else about the same concept. I spoke to my buddy, and he's like, yeah, there's a couple good companies you could look into. And he's like, did you hear waste management is run by the Italian mafia? Yeah, everyone knows this apparently. It's I don't know if it's a rumor. I'm pretty sure it's definitely true, and I mean I can see why it's.
I know.
I mean, sometimes coincidence isn't coincidence.
I know I know the trash collection on like the waste management in like I believe it was Naples, Italy. That's the mob. That's legitimately the mafia there.
I mean, that,
so I don't know if that's just kind of maybe it's a joke that kind of got that's also used for this actual waste management company. I don't know, but
I mean, personally, I think it's a joke, but
I think that seems like a joke
because I think that is the running thing. Like when you think of the mob, you know, oh, we need the disposal for the bodies, you know, like I mean, I feel like that's kind of the cliche, you know. You think of the mob, and it's like, all right, we need a way to get rid of bodies or things we don't want, right?
Yeah.
Like, yeah, we'll just buy a sewage company, or we'll just buy a trash.
Construction company.
Construction, yeah, like
Longshoremen's Union.
Yeah, right.
Yeah. See, in addition to that, though, the business practices are amazing because what does the company do? They buy real estate, they buy property, and then they just fill it with their trash, like landfills, and they recycle things. So they just get stuff for free and turn it into stuff that they can sell to other places, and that's all that they do.
Yeah.
Like the business is unstoppable.
To complete the circle of this idea of social development, you know, ultimately, if we want to see this transformation of adopting manufacturing back into America and going back to the nice balance that we should have, you know, people are just going to have to start getting into the mindset that college is not for everyone. Okay, everyone's going to have different goals, but it doesn't mean that we have to have everyone going to college. Because you know what? College is not for everyone. And it has nothing to do with intelligence. It has nothing to do about, you know, how smart or dumb you are. Mm-hmm. It's just, I mean, it's just a matter of preference, and it's a matter of emphasis. I mean, us growing up, the emphasis was college. And what happened? Many of us ended up going to college, and many of us are now having difficulties finding jobs because we're competing against such a saturated pool.
It lost its value.
Exactly. And I think what we need to do is, you know, with our own kids, I mean, we need to encourage, you know, their own individuality to choose and not really put a stink on, like, being the mailman and put a stink on being the garbage collector. Because at the end of the day, these are all necessary jobs. And if you look at the 60s and the 70s where we had a lot of neighborhood connections, people communally gathered in neighborhoods, and they got to know the people working within the neighborhood, the garbage man, the mailman. You got to know them. And unfortunately, a lot of people tie this into, like, racism and whatnot. And it's like, yes, I understand the 60s had racist undertones and whatnot, segregation. But I'm not saying let's recreate that. I'm saying let's recreate the idea of community. You know, reinstate that idea of us getting to know our workers, our families. You know?
I remember of a time when working with your hands and making stuff was cool. And actually, I've noticed something, which is that over the last couple of years, 5 to 10 years, you've seen a lot of TV shows that pop up about working with your hands, about making stuff, you know, like car shows where some mechanic just rebuilds and renovates an old Chevy or something.
Yeah.
Or like that one YouTuber that I watch from time to time, Alex Steele, where he's just a blacksmith and a weaponsmith, and all he does is make shit with his hands.
Yeah.
I mean, how much do you actually have to know to, like, forge a piece of steel? You need to know metallurgy, but that's not a highly educated job. You know, people have been blacksmithing for thousands and thousands of years, and they didn't have incredibly, you know, detailed educations.
Yeah.
I doubt that anyone who had gone to Harvard had also been a blacksmith in their life, but I mean, he's making good money with that TV show, I'm sure, and, you know, selling weapons. One of the weapons he made a couple months ago was a Viking sword that he sold for like $20-something thousand.
Oh shit!
Took him about a month to make, and if you can sell a sword for $20-something thousand every month, you're making decent money. That's $240K a year,
dude. That's
minus
big.
costs and stuff. That's big. Yeah,
he's already putting my degree to shame.
Well, that's nothing considering that he has a YouTube channel that makes good money, and he sells all these products and makes other stuff in the meantime too. His operating costs can't be. I mean, his operating costs is rent and machinery and equipment stuff, but it's not nearly as high as some office buildings or renting your own office. And, like he currently he had some warehouse or some random location in the UK. He moved to Montana. The property, the real estate out there is cheap.
Super cheap.
Yeah.
Dude, his actual operating costs are like stupid low. Aside from him and his employees to run the YouTube channel, film editing and if he needs like licensing for music and that sort of stuff, whatever. That's nothing considering the fact that you can put out a sword a month or something and sell it for $20,000-$30,000.
Yeah.
Just kind of diverting from our current discussion, I want to kind of get back to a stock we've talked about before, and that's Netflix. And Netflix has been hurting recently in their prices, and I believe there's a trend happening that I think is going to further hurt Netflix, which is more and more of its content, of its kind of keystone content is leaving the platform. Already we know The Office and Friends, some of the most streamed and most popular shows on Netflix, are now leaving for other platforms.
Yeah.
But now a content creator is now leaving the platform as well, and a big one. Jim Jeffries, the comedian, he has...
That guy's funny.
Yeah, he has left Netflix. He was one of the kind of big stand-up comedian stars that produced Netflix specials, and he's since left.
That's a big loss.
Yeah, and instead, what he's done is he's kind of went independent and partnered with an independent publisher and started shopping around and selling his specials. He just came out with a new special, I believe this week, and he had one more previous special that he produced independently. Now, typically the way the deals go with Netflix stand-up specials, and this is, Netflix has kind of become the place for stand-up specials, is that they pay you an upfront price, usually a pretty good price comparative to other platforms or places where you can sell your specials, but you don't get any of the back end.
Right.
Jim Jeffries saw that as a lost opportunity. There's a lot of money you can make in the back end. Yeah. So when he went independent and he partnered with that independent publisher, he got a smaller front end, but when he started shopping around and selling it to other platforms, whether that be he put it up on YouTube, iTunes, he got it on available for like cruise lines or airlines as like one of the videos you can watch on the plane. Yeah. And he made, I believe, from the first independent special, somewhere around $10 million in the back end.
Wow.
Yeah. So he made quite a bit of money. And he's expecting to make even more with this new special that's coming out. And this new special is actually partnered with, and it's an exclusive deal with Amazon. And he's gonna, and it's gonna stay exclusive on Amazon for 2 years, and then afterwards he can shop around and sell it to other places. And this is another signal that the competitors are really going to catch up to Netflix and really take a big part of its pie, because Amazon is launching this initiative, starting with Jim Jeffries, of more stand-up specials. Yeah. And so you're going to see a big competitor. Basically, what kind of Netflix did to the Comedy Central special, now Amazon is going to do to the Netflix special.
I mean, and just to fill people in on, like, when we're discussing, like, front end and back end of, like, a deal, right, or a bargain, the front end is typically, like, an upfront pay price, or like a premium to get you to do it. Back end typically is in the form of, like, royalties, cash flow, and then sometimes even equity, depending on, like, how much the company wants to dilute to you. And that's kind of the reason why the back end is more favorable, is because there's long-term value, there's profits beyond the initial pay. So, I mean, just knowing that, I mean, I understand why he's doing that.
Yeah.
Because even if you are receiving a huge front end, you could lose a massive back end on that.
The back end is pretty much like, once you've sold your film to people, how you market it. There's the advertising on it, or there's, you sell T-shirts and clothing with, merch, that merch, whatever it is, if you make a cartoon and you're Disney, you're selling toys for, you know, whatever it is, you know, making brand deals and stuff and recognition for it afterwards. That's the back end.
And another thing, and I'm getting all of this just for context from a Forbes article. Forbes. Oh my God, Forbes. Jeez, I've been messing up that name. Jesus. Forbes article named comedian Jim Jeffries rakes in $30 million by ditching Netflix and betting on himself.
Jeez.
So you can find it for yourself online. And one of the things that's mentioned, and this is a good point, is that when Jeffries released his special on Netflix, it was harder for people to find his special on Netflix when it was newly released, even though Netflix has a great big audience. The thing is, it gets drowned out in the just sheer volume of content that is out there on Netflix, especially because Netflix has become the #1 place for stand-up specials. Almost every comedian, it seems like almost every month, there's a few different specials that are released, plus all these other original shows and movies. It seems like because Netflix has upped its production of original content, it has also kind of drowned out its own content at the same time, because it's harder for shows to be discovered.
I think that's a side effect when someone goes from being an outlet for other companies and then slowly moves to being an outlet of their own product.
Yeah, so that's
kind of a problem.
This ties in perfectly with a theory that I made over the last, I want to say last week or so. So you're starting to see all these different streaming companies pop up, and everyone wants to produce a large volume of content because they want to be worthwhile. You know, if you're Disney, you want to have a lot of different things under your belt that you're going to stream on your service because your $10 a month needs to be worth it. If you have one TV show, no one's going to pay you $10 a month to watch that one TV show. So people are going to really revert to companies like YouTube, where the content is still free. However, companies like YouTube are as much as they are reliant on your typical content creator who's a nobody sitting in his bedroom recording off of his TV, who becomes a somebody doing the same thing because people begin to know and love them. They're uncontrollable, they're unpredictable because they're not under influence by some sort of company or organization that limits them from saying outlandish or ridiculous things, which is why companies like YouTube will start to promote content that is corporatized. Like, for instance, they would rather push content from Jimmy Fallon because they know that he's not going to go around saying the N-word or calling people out on, racist or hot topics like that. He's not going to start talking about abortion in the middle of nowhere. But you have content creators like PewDiePie who, accidentally said the N-word once, and there was a huge backlash, and then the Wall Street Journal posted a Nazi article about him, and then they lost, that huge deal with some Disney-owned studio, and YouTube lost a ton of money on that. They don't like the small content creators. They would rather push the corporate videos. And so you're starting to see a huge change in content on companies like YouTube or, say, Vimeo, for instance, where they would rather push content that can be controlled, that's more stable, that's more acceptable than your random dude in his bedroom. And this is kind of a long-term prediction, is that I think sometime within the next 10 years YouTube might become an entirely paid-for platform, because they will only support larger content like Jimmy Fallon, for instance, The Tonight Show, whatever it is, Jay Leno, who the frick knows, news channels, news broadcasts, and they become this company where advertising isn't enough for them. They want to catch up to the revenue of Amazon Prime or Netflix or Disney streaming. And so they're going to become a fully paid for platform. They're going to try and force this on people. And you're going to see other companies pop up and try and take their space. This is a huge, long-term, maybe 10, 15 years. I don't know how long. The thing is that this prediction is based on the fact that so many streaming companies are going to pop up. A couple things are going to happen for this to trigger, is that if you see all these streaming services pop up and you don't see them all crash back down into a new future Netflix, what Netflix did to cable, this is happening to Netflix now. So if you don't see it collapse within a relative period of time, YouTube will eventually join into this conglomerate, into this huge group of pay me or else you don't get free content.
I will say if YouTube does that's going to be an incredibly stupid move on their part. I mean, I cannot express how. Of course, I get that this this is a theory. We're speculating the future, but I mean, I hope anyone in YouTube who is even remotely considering this needs to understand that they are going to collapse super hard.
That is what's happening now.
Super hard.
So they have video like music videos and random YouTubers who are they're part of the YouTube Partners program where they get advertised on advertisement revenue from their videos just by having ads on there, but the content remains free. That's what a lot of these content creators are pushing for. But the problem is that you're starting to find more and more ads. You're starting to find YouTube is trying to make up for revenue where they could make up for by charging for their content without charging for their content. That is the staple of YouTube. That's why so many people use it, is that it still is and remains free. But you see that YouTube corporate is starting to miss income because they're not charging for it, and they've been continuously restructuring their company to try and make up for some of this lost revenue, and they're falling behind in growth compared to Netflix. Although Netflix, considering that they're not growing so much as we speak, they're tanking hard. It's still a relative comparison over the last 5 to 10 years. They've grown significantly as a platform. Everyone uses them, but they haven't grown as profitable as Netflix when it did to its prime. It's
yeah. I mean, what I would say about that is I'm sitting here kind of thinking about it, and I think more or less I'm thinking they probably won't do this, and I'll tell you why. Most companies that realize they have a niche or a cornerstone in the market have to evaluate who their true competitors are. Although a lot of people will be moving towards streaming and the services to create additional revenue streams, that market's going to become incredibly cutthroat. We saw that with cable.
It already is.
Cable became cutthroat, and it already is becoming cutthroat. Now people have to decide: Hulu, Netflix, Amazon Prime, Disney Plus, NBC, Showtime. A lot of these things are moving on to streaming stuff. The thing with YouTube is, as much as I believe it's true, they do want a voyeur for more of a different revenue stream or even the creation of a new one. I think YouTube won't do that because they understand that they are very unique in the service that they provide, that if they were to reform, it would leave such an open space in what's already niched to them. You know what I'm saying? Like, what is
a competitor can come in and just
and crush them,
and
completely steal the niche. Now, and that's the thing. They have differentiation and they have low cost. That's not a very easy thing to throw away, especially if you're just trying to create a new revenue stream.
It depends on how you consider their. It depends on how you consider their operating costs are maintained.
But I'm thinking on economic opportunity cost. The next best thing they could lose is their position in the market. That is probably the biggest and most valuable thing, which is why I don't think the opportunity cost will ever be surpassed. Because they don't have a direct competitor. Or at least not a declared one.
They have competition in the market, but nothing remotely as close.
Exactly.
Which is why I give it a long-term prediction, like 10, 15 years.
I would say, for that to be true, a new competitor would really have to go in fighting. Because YouTube is not a very easy company to take on.
I don't see why other platforms don't pop up with completely free video posting with So the thing is that it used to be that you could go on YouTube and see, you would see random people pop up on the trending page that you've never heard before. Not people that are YouTube partners or companies, but like that random guy. Because I only consider this because it seems like they're continuously pushing premium content over free content.
Yeah.
That it's becoming an operating expense. That it's becoming missed ad revenue. That it's sort of they've been trying to push their own valued products for years now, like YouTube Red, which kind of fell through. I think they turned that into YouTube Premium or YouTube Plus.
It's YouTube Premium.
Yeah, I don't even know what it's called anymore. And they're trying to also separated YouTube Music from the YouTube Premium. So now you have to pay to listen to music in the background on your phone, which is something my phone used to have a couple years ago for free, but now all of a sudden I have to pay for this just to hit home and YouTube run in the background and play a song, you know?
I mean, I think that's as far as YouTube will go, though.
I don't know.
Because it wouldn't make... I mean, just think about it on an economic standpoint. It doesn't make any sense.
So the theory is that this will only occur if you don't see a collapse of all of these streaming services in the next 10 years. If they continue to aspire and make money and you don't see, you know, all of them fall and break into one, you might see YouTube jump on the bandwagon, is my prediction. If you do see an issue with a million different streaming services and all of a sudden this prediction of ours comes true that they're all going to collapse and it's going to be like cable all over again, you won't see YouTube join this.
I don't know. I don't know if I see YouTube going full
it's kind of an extreme
paid model.
It's kind of an extreme prediction. So
what I do see though is YouTube hopefully dipping further into the live streaming genre or live streaming category.
That is what I was thinking. Yes,
because recently the news came out that one of the most popular Twitch streamers around Ninja has left Twitch, which is the largest live streaming platform, and went to a competitor called Mixer. And now Twitch, for context, is owned by Amazon, and Mixer is owned by Microsoft.
Right.
And a lot of his fans moved over, and now Mixer has had this giant surge of new customers.
Did you hear that?
I literally read about that the other day.
Yeah.
And that is realistically what YouTube will become.
I also read that someone got access to his account and posted porn on his live stream.
Really?
So it wasn't someone else getting access to his account. It was actually Twitch itself suggesting that porn video. So Twitch,
did their algorithm mess up?
They claim, Twitch claims that it was testing out a new feature where if a channel is not live, if someone is not streaming, it will suggest the person, the viewer, to watch other live channels.
And it would advertise other Twitch streamers.
Twitch streamers that you might like based on
similar
suggestions.
Genre. And,
one of their suggestions was a porn channel. It was basically a channel that was streaming porn, which is against the rules of Twitch.
What the hell?
And the typical like. The audience for Ninja is younger kids.
Yeah.
Young audience.
Yeah, it's a young audience. So there was a big backlash at Twitch for doing this. Everyone was upset at them. They apologized and have turned off that feature that was apparently being experimented on Ninja's channel. But it's also speculated it might have been a sort of retaliation against Ninja, although no one can really confirm that accusation. So there's an opportunity there where if Mixer can do that, YouTube can also do that with other popular streamers. If other popular streamers are given good offers by YouTube, they can then jump onto the YouTube platform.
Where does Twitch make their money?
Twitch makes their money from advertisements and from subscriptions. So there are ads that occur on Twitch before before the stream starts. When you click on a stream you want to watch, there will be like a pre-roll ad, and also it's up to the streamer if they also want to play their own ads for a little bit extra money. So during during a stream they'll maybe want to take a break, be like 5-minute break. They'll play an ad. They'll go have lunch or whatever and come back, and in that break time ads will play. Or an ad will play.
Do they have banner ads and that type of stuff as well? Because that brings passive revenue.
I was using their mobile app, so I didn't see any banner ads. I don't know if their website might have them. From what I also know is a lot of money comes from their subscription services. So they have two different subscription types. There is, I believe it was called Turbo. It's a subscription service that gets rid of all the pre-roll ads. So you don't see any of the pre-roll ads, and you skip all of that, and there's a few other extra features that it gives you, and Twitch makes money from that. And another one is subscribing to channels. So a subscription is typically around $5 a month. You give money to a content creator that you like, but of that $5 a month, Twitch takes a cut of that. And so they make money from there.
Sounds like Patreon, but like videos.
Yeah, so yeah.
How does it feel that huge companies will literally offer services so that people can ignore the work that you're trying to accomplish? Yeah, going into the marketing industry, your job is literally to advertise and market and sell things to people, and people go out of their way to pay money to never have to listen to that again.
You know what's funny? You know what's funny about that? And I've thought about this for a long time. For me personally, yeah, that is a big ouch, by the way. But for me personally, I mean, we grew up with TV. We were the cusp generation that still had TV, right? So I mean, we all had cable at some point when we were kids. We had commercials. You know, and the commercials were pretty long, but I mean, let's not fake it here. Like, some of the commercials were pretty entertaining to watch.
Some of them, yeah.
Right? And it's so weird to see how impatient our generation got so fast when even an ounce of convenience hits the table. Our generation jumps on it.
Yeah, it's global ADD.
It is. It's crazy, and that's
a great description of it.
Yeah, and I mean, you know, everyone's talking about how like the baby boomers are taking advantage of us and whatnot. Well, I mean, this is kind of their way of doing it. Is they know a lot of us are impatient. They know a lot of us don't want to even waste 30 seconds to watch a video, and so they're like, "Oh yeah, don't worry, just pay $5 a month. You won't need to see them anymore. No problem. Just pay $5 a month. No worries. You won't get banner ads. No problem. No problem."
I have an example. I have an example of how extreme. Actually, there's two examples. Is first of all, every YouTube video, most of the ads have after 5 seconds you can skip the ad button.
Mm-hmm. Yeah.
And then the other thing is, I remember the internet going crazy about this happening because they absolutely loved that Netflix did this. Is that Netflix added the skip intro button.
Yes.
So you don't have to sit there and watch the intro. You could just click a button and it jumps through the whole intro. It's not even an advertisement. They just don't want to see it. They don't want to wait 20 seconds.
That was the most wild thing I saw. Now, I won't lie. I use it when I watch The Office. Yeah. But I'll tell you what, though. If they didn't add it, I would not complain either way. And that's the thing that got me was I wonder how much of a demand they had to really create a function like that.
It was also a genius move by them because there's this whole, you know, it's a thing to binge watch shows on Netflix and all these streaming services, and having a feature like that where you can skip the ad and immediately get back into the show, immediately start off where the last episode left off.
Yeah,
that encourages binge watching.
That's true.
It's also a way of kind of stoking the fire of this trend that's kind of really started with Netflix of this binge watching.
And you know what? And this is the most interesting part, because if you look at it from a sociological point of view, right, how society is transforming, our generation is a huge, ironic oxymoron. And I'll tell you why. It is because all of us, or I shouldn't say all, a lot of us in our generation want to fight big corporation. A lot of us want to fight all these lazy baby boomers or all these like rich people who monopolize off of other people. And yet, when it comes to the most simplest of tasks, we look for the easiest, quickest, and sometimes the most inefficient way to do it just to get it done. And we're all sitting here like, wow, I wonder how these companies are getting so big. I wonder why these lazy people are somehow making all these money, these rich people. It's because we're lazy motherfuckers too. Like, we're impatient. We want the most convenient things regardless of the price, regardless of the long-term value. We want satisfaction now, not satisfaction later. I mean, if you want an easy description of our generation, we are the most impatient, convenience-gouging generation there is. We want the simplest, most gratifying thing now. Even if it means that I'm forfeiting a long-term gratification.
I will tell you, though, and this is a strong belief of mine, is that laziness brings innovation.
It does.
Yeah.
I agree.
Oftentimes, the laziest people are the ones who think of a way to do something much easier and much faster and more efficient than someone who's willing to work hard at it.
I wouldn't even argue that's necessarily lazy. I mean, I think it's just someone who... for example, I think one of you were saying this, but like an engineer who has a task that takes 6 seconds will figure out a way to make that 6 seconds 5 seconds, and then that 5 seconds to 4 seconds, and to the point where it's like the absolute fastest and most efficient way to do it. And I mean, you know, some may view that as lazy because they want to save a couple seconds, but I mean, at the end of the day, you know, you're looking for what's most efficient, most effective. Well, but more or less, I'm thinking about like the impatience, you know, maybe not necessarily lazy. But
it's a combination of both. So my dad used to work as a mechanical engineer. Like I said, he was in corporate America, and he would work. There was one company that he worked with that canned jalapenos. The real reason that they hired him was because they had some tooling equipment that would constantly get eaten up by the acid that they would mix with the jalapenos that, you know, they would can, and it would completely destroy this really expensive tool. This tooling was like stupid expensive to manufacture, and they would have to replace it every couple of months, and it was kind of complicated and a, you know, very not cost-effective process. So they hired him to figure out what the hell's going on. And he, you know, changed a couple of materials on the tooling, he changed a little bit of the design, and basically his job was to simplify the process because 1, it took too long, 2, it cost too much money, and 3, they constantly had to fix their broken tooling every couple of months. And they got tired of fixing it, and they, like, before they could just absorb the cost. It's not a small company we're talking about, you know?
Right.
But they would just absorb the cost. Eventually they got tired and lazy and said, we don't want to do this anymore. I'm tired of constantly fixing it. I'm tired of having to wait for this to be fixed and redone. They hired someone because they're lazy and they're cheap. And they said, fix it. And he came and he changed it and he fixed it, and they never had to do it ever again. He basically used materials that were more resistant to the acidic nature. So, like, for instance, you wouldn't put something in steel. You wouldn't put an acid into steel because the steel will oxidize and rust or get eaten away. But you might put something into stainless steel because stainless steel is more resistant to oxidation and rust.
You know, I would argue they weren't lazy, though. I mean, that sounds like a massive inefficiency.
It is. Yeah. No, well, that all stems from the same core concept, is that you don't want to do something, or you don't want to pay for something, or you don't want to wait for something. So you hire someone to...
I don't know about that, though, because, I mean, that one sounds like a hemorrhage of funds.
Well, that's what it is. You don't want to pay for that. Why pay for something if you can fix it and change it? But they had to front the massive cost that was my dad. It's not like they weren't paying him, and he was making probably, you know, $120K a year at the time as a senior project engineer.
Well, I mean, like, people who hire consultants aren't necessarily lazy. It just might be like a different skill set. I'm pretty sure that company just didn't have, like, you know, the skill set for that type of fix.
Whereas they were paying $40,000 every 4 months to fix the tooling, now they're paying him $40,000 every 4 months to fix the tooling.
Yeah, I mean, that sounds like more of an efficiency upgrade than an approach of lazy. I mean, that sounds
once
like
he left, their cost was cheaper, but it was simply because they were, like, it's the same money, at least for that period of time. Their cost goes down over, you know, a year or 2 or 3 or whatever it is, but it's simply because they got tired of fixing it. You got to think about the money aspect. It's not like they're not paying an engineer to do the job that this would have done otherwise.
I get that. I just don't think that's synonymous, though. I don't think that's synonymous.
It stems from the core concept, which is why it breeds innovation. It breeds people to make these fixes that they don't want to deal with anymore. You know?
I think more or less I would compromise that it's a strive for efficiency that might have the undertone of not wanting to put up with inefficiencies.
Yeah, that all comes from laziness and you know.
But that's the thing. I don't think so. Not purely. I mean, granted, I'll give you like an ounce of it, but there's a certain way we have to define this. You know,
that's just the way I'm defining it.
Yeah.
So
okay, all right.
Humans are, to a core concept, lazy. If we could just be fed and fuck all day, that's what we would do if we never had to worry about money for the rest of our lives.
Okay, all right. So we'll use that as a concept.
Yeah.
I like
so the concept is that you're lazy. You want to do less work, so you're more efficient in your work, so that you don't have to work as hard. That's where all this comes from. They don't want to have to continuously fix this tooling, and they don't want to have to continuously pay for it. So how can we just figure it out once?
See, this is why we have an engineer and someone not of a business background, because as you can tell, my mindset was not thinking that. I was thinking more of a financial perspective.
You're
but
still
that's why
paying for it.
Yeah, you're still paying for it, but I get what you're saying is there is that ounce of laziness or the strive to achieve the most optimal, to forego any effort.
Yeah.
I see what you're saying. Okay,
so you're not paying for the tooling, you're now paying for the engineer instead.
Right.
And the engineer has to maintain this new tooling and make sure that it works, and quality control, and run that over a significant enough period of time to where you can make sure that the new tooling doesn't do the same thing. And there's a certain level of quality control that's required for this. There's a certain level of standard of engineering and, the time it goes into it, materials, whereas you could just not hire the engineer and cover the cost of the broken tooling.
Yeah, I get it. Yeah. Yeah, it's true.
Especially with a company that, they'll do tens of thousands of cans of jalapenos over whatever amount of time. It's not a small cost for either or.
I think what will be interesting to see in the next 20 years or so is, I think that concept that you've described is going to extrapolate further with the combination of our generation's impatience and kind of this just hunger for instant gratification. I'm really curious to see what kind of society is going to come up from that, because I'm personally a little worried, because when it comes to instant gratification, we don't really think about what we're giving up to achieve the instant gratification, right? To be incredibly crass here, self-pleasure, right? Just, I know this is a very crass topic, which is why I'm not obviously going to go into detail of it, but the instant gratification more or less overachieving a partner, right? So in Japan, you have a huge decline in marriage, you have a huge decline in childbearing rates, and I personally believe it's the mixed culture of instant gratification versus the actual effort it takes to get to know another human being. You get what I'm saying?
That's
right?
why Tinder's a thing.
That's why Tinder became a thing, because we wanted the instant gratification. I don't want to talk to you for a day or two and then possibly go to the bedroom and do something. No, I want to just go on an app. If I like you, swipe. If I don't, swipe. And next thing you know it, boom, we're done. That's it. And I mean, I feel like there's going to be these undertones that come out into the future where this will become problematic. Right now, it's not terrible. But I think in the next 20 years, we're going to see a huge societal shift where all of our parents die, and now we're just left here instantly wanting things that we were kind of relying on the older generation to build.
Are you saying that the new generation is going to, in theory, lack for I lack the proper term, but I guess foreplay?
Kind of. I mean, I guess that is kind of the foreplay of life, really. I mean, the idea that you have to kind of give up some of the instant gratification today to have more gratification tomorrow. It's like that test they had with kids where it's like, hey, here's a marshmallow. If you wait 10 minutes, I'll give you another marshmallow, right? Yeah. But that brings in the idea of opportunity cost. Do I want the second marshmallow? And that's the thing. I think because we're so overly saturated with instant gratification, we don't even consider the opportunity cost. We don't even consider whether or not I want that second marshmallow. We're just like, you know what? The marshmallow's here right now. I'm going to eat it regardless. Even if I want the second marshmallow, I'll still eat the first one.
What if you don't want the first marshmallow?
Well, I mean, we're assuming you want the marshmallow. Yeah, that's when we're going to go into philosophy and the segmentation of desire. Yeah, right. But I mean, that's just kind of food for thought, because that's going to transform the business environment. That's going to transform how business is conducted. Because remember, in business school, we learn connectivity is huge, right? Contacts, everything. But I mean, what happens when we get to the point where we just don't care to get to know each other? It's like, I just want you to do something. I don't want to know you. I don't want to know who you are. I don't care who you are. I just want you to do it, and I want to get my gratification from you doing that.
I think I heard someone say, they told me I should text them more often, but then they said, well, I don't know. If you don't text me, I won't be offended, because I only text when I need something from someone.
There you have it.
Yeah, I mean, well, so texting is a whole nother thing, because that's the same concept of instant gratification. Mm-hmm. You can talk to anyone at any time, anywhere, and you assume that they'll text back and respond to you, and you try to get to know someone over text message. Right. But that's same concept is I only text someone when I need something from them is that you just want them to do something for you.
Yeah. I mean, if you guys really think about it, I mean, how many times, unless it's like your best friend or like a family member, and even then it's questionable. When do you really send a text like, hey, how's it going? Like, not really. You know, I mean, unless you know someone's having a bad day or something, like out of the blue, do you ever just go like, hey, how's it going?
No,
you don't. Not even with family. And I think you're correct in that, you know, it's the instant gratification of like, you know, if I don't really need to talk to you, I'm not really going to talk to you.
Well, I mean, I'll call my grandma and stuff and my parents, but like,
right.
You know.
I mean, I'm not really focusing too much on, because I think that's more on like the sentiment type of end, or the care that you have with like a family member. But if we're just talking about like the practicalities of, you know, your gratification.
Yeah.
I mean, you hit it on the nail. You know, that's what it is. You know, we don't really.
Yeah, we're too lazy.
Do that. Yeah.
It's too much work.
And I mean, it's, you know, it's one of those things where it's not really bad, it's not really good, it's just a thing. And then in the next 20 years, we're going to see this thing really transform once our parents die, and once our grandparents, well, our grandparents are currently dying, but once our parents die, you know, we're in control. Like, you know, we are going to be in control, and everything that we have held onto as a standard will become the new standard.
So we're all too lazy for blue collar work, but blue collar work is also the new demand.
Yep.
Yeah. So, you know, who's going to fill these jobs?
Yeah, and you know what? I think it's going to be the generation next behind us, because our generation. Remember, we were talking about the political bell curve a couple podcasts before. I mean, just to reinstate it, the political bell curve in the prior generation is typically just a central one hump bell curve, meaning that most people lie in the center with, you know, some people leaning slightly left or right, and then of course a small percentage of extremities, you know, the outliers. Now, today in our generation, we are a two hump bell curve, with more people becoming heavily concentrated on one side or the other and not considering another side. So what's interesting is our generation is not going to be this new political supporter and reformation of government. I think it's going to be the generation before us, because they're a bunch of cynics.
Well, they were all raised to be, you know, movie gods and rock stars, and and they're all, you know, thinking they're going to be millionaires when they grew up, and we're just being raised to get an education and have a job. Yeah,
I mean, the generation before us don't really care too much about what's going on the political end. All they want is they just want someone who's confident.
Before or after us, you mean?
Sorry, after us. After us, not before us.
Okay.
After us. I mean, you know, just looking at my brother's generation, you know, my brother's 16. Obviously, you can't, like, in tune on all their personalities and what they're going through. But, I mean, a lot of them just don't give a fuck about current affairs. A lot of them are cynics at heart and just don't care what either side has to offer. They're just asking why. The question why. And I think that's what our generation kind of lacked a little bit, is the why.
Yeah.
You know what? I mean, like, my current boss at X location. Okay, it's not my office, but it's the other job. I don't want to name. I don't want to name drop. I mean, I'm planning on putting in my 2 weeks, but I mean, like, you know, I'm just throwing it out there. He's 28, I believe. You know, worked at Disneyland, and dude, he lacks the most basic managerial skills of anyone, and a lot of it is just. He doesn't ask why. He doesn't answer why, because he doesn't ask why. And I feel like there's a really common trend with our generation is we don't ask why we do something or why something is. We just don't like it. And we just go against it without even logically thinking about these things.
It's
the loss of reason.
It's kind of related, but I was talking to Igor, my handyman, the other day, and he said something that really caught my interest, which was he told me, listen, I'm getting older, but I'm doing physical labor, and for me that's not a big deal, because at this point I've realized that I can't make all the money in the world, and I don't have enough time to make as much money as I wanted to make, and the 25 to 30 bucks an hour that I'm making right now is good enough for me. And he was just working because it makes some amount of money, which was enough for him to live life the way he wanted to live. And that really caught my attention, because he just said, I can't make all the money in the world anymore, and I know I'm not going to make as much as I want to do. Yo.
I'm sorry, I was trying to, like, hone in on what you were saying there. I thought what you were saying was good. but Sarkis literally just ate a freaking hot sauce packet by itself.
He just shoved it in his mouth and just went down.
I was just watching. He opened the packet and I was like, he doesn't have any food, and he just ate it. I was like, what the hell?
Okay, hold
Why?
on. You're making it sound like I ate the plastic.
Okay, sorry, no, you didn't eat the plastic, but you literally drank the sauce. Like, I don't even know if that's worse than eating the plastic. I mean, like, what's... Jeez.
I love hot sauce, so...
Damn,
oh my god. I'm sorry, Peter. You were saying something pretty good there, but that was...
sorry.
That was so... Oh my god.
So he basically said, I can't make all the money in the world anymore, and I'm just going to make what I can make, and that's it. Like, he kind of gave up on thinking on, like, lofty goals and massive dreams of being a millionaire and a rock star and a movie god. He's not the generation before us. He's the generation before that. He's like 50-something, 60, like
he's
late
the in-between
50s.
generation.
Yeah. And he basically has given up on the rock star, god, movie star ideal, millionaire, billionaire, whoever, and is kind of accepted that he's made whatever he can make, and he's done what he can done with his life, and he's just, making ends meet, and that's good enough for him.
Well, it's kind of like the thing of preparing for the best and being ambitious for the best, but expecting and preparing for the worst.
No, that's it. He's given up on ambition.
Well,
Ambition has gotten him nowhere.
I'm saying that's the point he's at, but I'm saying that's what we should be doing. It's okay to be strong dreamers. Like, I'm sure he had a lot of dreams and goals that he wanted to achieve, but as you get older, he adapted and he kind of accepted the, you know what, I didn't get to that point, but I'm gonna make it work now into something practical. I'm gonna make something work now so that everything I did before building to that goal didn't go to nothing. I'm assuming he's making use of what he had.
Yeah,
right?
for sure.
Yeah.
He's building things with his hands. He's making stuff. He's a handyman.
Exactly.
But he used to be a civil engineer. He used to have actually much nicer position back in the day when his work was still relevant. And now that he's moved out to a different country, he found different work. He talked to different people. He didn't really continue to follow the same career path, and he decided to work with his hands instead. He just kind of said, "This is enough for me." That's not something you see often.
It's like in episode 1, 2, or 3, I can't remember. When I was talking about the idea that everyone seems to think they're special or unique or like one of a kind, and nothing can possibly replace them, and that they're this like, out of 7 billion people, they're 1 in a billion. It's like, at some point we all were probably thinking that, but then when you get older, you just kind of accept the fact, if I die today, that's it. Like, you know what, my family and friends will be bummed, but there's 7 billion people in the world who probably won't give a fuck.
You'll get replaced, you'll get changed out, someone will do your job for you.
Exactly, and I mean, as special as we are told we are, and granted, we all have unique personalities and whatever, at the end of the day, we're not like these superhuman gods that are like one of a kind and none of us, no. I mean, we're replaceable. And I think once you understand that, you get into the mindset where you can dream big and you can strive for your goals, but you also have that ounce of reality in the back of your head saying, you know what though, if it doesn't happen, this is my backup. If it doesn't happen, it's okay because I have this going for me as well. This is actually good advice for, like, say, looking for work, is that you don't always have to set yourself apart. Everyone says you have to set yourself apart in your resume. You have to be unique, and something has to really... That's not true. Yeah. I think in your resume, what you need to show is that you might not be unique because you have the same talents as the next guy, but you're good at what you do, and you can do this job, and you can be replaced. As much as you know that you can be replaced, why not pick you? You're good at this job. You know that you can do this work. This is what you're here for. Prove to them, some sort of confidence that as much as every person might be unique, that's what makes us all exactly the same. Yeah, I mean, Sarkis and I, we learned corporate culture and work environment culture, right? If everyone was unique, how would that possibly work? I mean, let's think about it. How could that possibly work?
How would you market to 1 million people if every single person is different?
Exactly. How on earth would an environment work? Yeah, exactly. There has to be these common grounds, and I mean, you know corporate culture. You know exactly. And for anyone listening who doesn't know it, it's as simply put as the way the office functions, not in the regular course of business, but rather in the communication and the effective work environment for everyone's like personalities and whatever. If we were all unique, that wouldn't matter.
So,
but obviously not all of us are.
I think just one of the last points is looking for jobs as an engineer. I've noticed something is that a lot of these bigger companies will offer internships to students, and specifically a certain group of people, the group of people that are not unique. They're not looking for someone with a lot of education already under their belt, and they're not looking for someone who has experience in the industry. They're looking for the large group of people who have no experience, who are still in the undergrad program, who want to become an engineer. They haven't done any meaningful projects. They have nothing meaningful to put on their resume. And these companies are hiring these people as interns because they want the future to grow. They want these people who aren't unique in any way to join them, to learn the quirks of the industry, how things work, and to figure out and sort of grow into the industry. I was talking to my dad about this, who pretty much said, listen, this company, why hire someone who doesn't know what the hell they're doing just because they're young and you can pay them less when you can hire me? I have 30 years of experience under my belt. Well, it's simple. The industry has to grow. You have to educate them. You have to introduce them in the industry. They might not have any idea what it is that they're doing, but they will in 5 years' time if you teach them. And that's why they're grabbing the people who aren't unique. They're grabbing the people who are not unique at all, who have nothing special to set themselves aside from everyone else, because those are the people that will adapt to what it is that you need, that'll learn the trades of the industry, that'll learn the tricks, that'll learn how to do what it is that they need to do over the people who are unique. They're not looking for this uniqueness. They're looking for work.
Well, see, and that just further bolsters the whole thing I pretty much talk about this every podcast, but, I don't care about your sexual orientation. I don't care about your religion. I don't care about your background. I only care about one thing, is your merit. What you're achieving, what you're willing to learn, what you're willing to do. And that's exactly it. The idea that I'm looking at your long-term valuation. I'm not judging you, or at least for me personally, I know some people do judge based off race and religion and sexual orientation and all that stuff. But at the end of the day, people shouldn't, because it doesn't matter. I'm looking for you to complete a merit-based assignment. I don't give a fuck what you do.
Your work.
Exactly. And that stems down to it. You're unique to all those things, but in a work environment, no one should really care.
Yeah.
No one should really care. Because you can talk about it, you can understand it, but at the end of the day, we need you to do a job. Let's work as a team. Let's do the job. Anything that happens outside of the office, that's you. But we're looking for merit, But of course, that does conflict with certain corporate cultures. But yeah, that's a whole other topic.
So I think that's kind of where we're going to leave off on episode 5. As for kind of our sign-offs, just remember, we are on Twitter. We're on Instagram at Financial Decapitation. You can reach us through email at fdinvestmentgp@gmail.com.
Post on our Reddit.
Post on our Reddit at Financial Decapitation. You can also find us on YouTube and anywhere podcasts, Apple Podcasts, Google, Spotify, all that.
iTunes.
Yeah. And if you actually look us up on Google, we'll actually be the first thing that appears on the Google search.
Hey.
Yeah, Financial Decapitation. So 100% you'll be able to find us on a ton of different outlets. And we want to make sure we can maintain that two-way communication, because at the end of this all, we want to help you all learn, and in return we want to learn from what you have to input, what you have to share. So, keep up the investments. Let's start to maintain that communication and learn together. And over time, we'll become a very successful generation as long as we work together.
Send us your crazy theories.
Yes. Yeah. Please.
Especially with Epstein, we need more conspiracy theories.
I'm pretty sure most outlets have that covered. So.
I guess.
No, they're not covering everything.
All right. And yeah.
All right. I need to pee.